Imagine a world where the visionary insights of the ultra-wealthy are not a product of chance, but the result of an unyielding quest for understanding that combines cutting-edge data analysis, decades of historical wisdom, and an instinctive grasp of market sentiment. It is in this realm that billionaires predict economic crashes before they happen. Today, we delve deep into the secret strategies and methodologies these financial titans employ to forecast downturns long before the rest of us even sense a tremor in the global economy. We reveal how every subtle market signal, from shifts in interest rates to changes in consumer behavior, can serve as an early warning sign of chaos. By harnessing these clues, the world's richest individuals position themselves not only to protect their fortunes, but to profit enormously when the storm finally arrives. Over the past several decades, while the global economy has become increasingly interconnected and volatile, an elite group of investors has managed to build a reputational advantage by developing sophisticated models that interpret the interplay of international trade imbalances, government policies, and unforeseen geopolitical events. These methods are a remarkable fusion of high-tech algorithms and old-school economic theory, refined through years of first-hand experience during historic crises. From the Great Depression to the 2008 financial meltdown, where every anomaly in commodity prices, credit spreads and market liquidity was scrutinized with an intensity that allowed them to anticipate disruptions and make strategic moves well before conventional experts even noticed the warning signs. They scrutinized not only the obvious economic indicators, but also the nuances of investor sentiment, the ripple effects of central bank decisions, and the undercurrents of political instability that, when combined, create a unique mosaic of risk and opportunity. In essence, they have turned the chaotic puzzle of global finance into a pattern that can be read like a map, where every irregularity and divergence from the norm is carefully noted, analyzed, and transformed into actionable intelligence. The answer lies in their relentless dedication to collecting and interpreting vast amounts of data, partnering with leading economists and employing advanced machine learning techniques to continuously update their predictive models, ensuring that no detail, however minute, goes unnoticed. By maintaining this level of vigilance, they are often able to detect the early signs of systemic imbalances, be it an overextension of credit, a bubble forming in asset prices, or a misalignment between market expectations and economic fundamentals that signal an impending downturn. Their methods, though shrouded in secrecy and accessible only to a privileged few, boil down to one critical principle: never ignore the small anomalies, for they often presage the big crashes. As a result, every day they monitor fluctuations in key economic metrics such as interest rate spreads, inflation trends, and consumer spending patterns, constantly questioning whether the prevailing market enthusiasm is masking deeper vulnerabilities that could lead to a dramatic correction. Moreover, these financial prophets understand that economics is not solely a numbers game, but also one of psychology and sentiment. They recognize that the human elements of fear and greed significantly influence market dynamics. They observe that periods of exuberant growth are frequently followed by bouts of irrational pessimism. By aligning their forecasts with these behavioral cycles, they can better time their strategic shifts, from accumulating assets at low prices to liquidating positions when the market begins to sour, thus shielding their wealth from widespread panic. In today's fast-paced digital age, where information travels at light speed and the global marketplace reacts within seconds to breaking news, the ability to disentangle meaningful signals from the overwhelming noise is a skill that sets these billionaires apart. Advanced computer models coupled with expert human judgment create a powerful synergy that transforms raw data into foresight, enabling them to navigate the turbulent waters of international finance with a confidence that often seems almost prescient. For instance, while many investors might dismiss a slight uptick in unemployment or a moderate rise in inflation as routine economic events, these trailblazers know that such indicators, when viewed in the context of broader structural changes, such as mounting government debt changes in regulatory policies or global supply chain disturbances, can serve as harbingers of far more serious disruptions, prompting them to adjust their portfolios well in advance of the mainstream realization that a downturn is imminent. While the average investor might be overwhelmed by market volatility and the sheer scale of global economic forces, these billionaire strategists embrace uncertainty as an inherent part of the economic cycle, understanding that every period of boom carries within it the seeds of a future bust, and that by studying the cyclic nature of history, they can spot patterns that allow them to sidestep disaster and even thrive during turbulent times. Their approach is a potent combination of empirical research, real-time analysis, and an almost instinctual ability to interpret shifts in market psychology, forging an unparalleled edge that has been honed over decades. It is this blend of art and science that underpins their success and ensures that even as the economy appears robust, they remain alert to the warning signs of a collapse that could upend the status quo in an instant. Consider the story of one renowned investor who, having observed subtle anomalies in credit growth and skepticism creeping into market forecasts, gradually rebalanced his portfolio over several months ahead of the 2008 crisis. A move that not only preserved his wealth, but allowed him to purchase undervalued assets that later skyrocketed in value as the recovery took hold. Such anecdotes underscore the fact that the prediction of economic downturns is not a matter of hindsight, but of carefully reading the present and anticipating the future with precision and courage. This intricate dance between data, human intuition, and the unpredictable forces of global finance often seems like a well-guarded secret. Yet it holds valuable lessons for anyone interested in understanding how economies function and how crises emerge. It also challenges us to reconsider our own financial strategies, urging us to look beyond the surface of market trends and to develop a critical awareness of the dynamics that drive both prosperity and peril. As you reflect on these insights, ask yourself, what if you could learn to discern these hidden patterns in your own financial life? Such questions are not meant to provoke anxiety, but to inspire a proactive approach toward financial education and risk management, reminding us that while we may not all be billionaire investors, we can all benefit from a deeper understanding of the forces that shape our world. If you're finding these revelations thought-provoking and they inspire you to engage more deeply with the mechanics behind market fluctuations, I invite you to join our growing community by subscribing to this channel, liking this video and sharing your thoughts in the comments below, because your engagement not only fuels further discussion but also helps us build a more informed and resilient audience ready to navigate the complexities of the modern economy. Moreover, as you continue to explore the fascinating world of economic predictions, remember that every cycle of boom and bust offers invaluable lessons on risk, opportunity, and the power of foresight, serving as a reminder that even in the face of uncertainty, a well-informed strategy can transform potential disaster into a stepping stone for success. Look beyond the daily noise of the news and take a moment to appreciate the subtle signals that ripple through financial markets. For it is in these quiet interludes that the true story of our economic future is written, page by page, by those willing to challenge the norm and seek out the hidden trends that others miss. And if you're eager to dive even deeper into these ideas, I encourage you to check out my short ebook, Economics for Normal People, where I break down complex economic theories into simple, actionable insights that can empower you to make smarter financial decisions, understand market cycles, and ultimately take control of your economic destiny. Throughout this discussion, recall that every economic forecast is only as strong as the data and insight behind it, and the remarkable ability of billionaires to predict crashes is a challenge to us all to stay ever vigilant, continuously educate ourselves, and be prepared for the inevitable ebbs and flows of global finance. Let this be a call to action for every viewer to embrace financial literacy, question conventional wisdom, and convert uncertainty into opportunity. I appreciate your time and engagement, and I look forward to your feedback in the comments as we continue to explore the hidden depths of the global economy together.